Hey guys, I think all of you have came across the news about Silicon Valley Bank collapsing over the last weekend. The government and the feds are helping this bank to come out of this situation right now and to return back the money of the depositors. In the meantime, it has created a massive panic among the US citizens. The bank nifty of US has already dropped by 17% over the last 5 trading days. This has also created a panic among the startups, which has a lot of their money stuck with this bank, and even few prominent and unicorn startups of India like Paytm and Shaadi.com has their money stuck with this bank. And if you're familiar with Y Combinator company, which is a investing company, a crucial investing company among the startups, I think you're familiar with Gary Tan, who is the president of this company. He also addressed this situation as an extension level crisis. But the thing is, he didn't give clarity on what or to whom this is an extension level event. Is it for either the bank or for the people or for the startup? So all these things lead to 3 questions. Number 1 is, how did this actually happen? What led to this collapse of this bank? And number 2, what impact does it has on other US banks, US market, and even on Indian markets? And number 3, how is this bank planning to come out of this situation, and what are the measures they are taking now? So if you're new to this channel, please subscribe and like the video. And don't worry, even if you're a beginner in this field, you're going to understand everything in this video. So let's get started. But before going in, make sure you subscribe and hit the bell icon. So in order to understand what led to this crisis of this Silicon Valley Bank, first you have to know operational model of this bank. Silicon Valley Bank's main objective is to help and support startups, and most of the deposits also comes from these startup companies in the form of VC fundings. VC is acronym for venture capitalist. So let me explain with this an example. So I'm starting a company called ABC and I need 100 crores funding to function my company. So I go to an investor for this 100 crores and they grant me my money. For now I need only 50 crores for R&D and production, etc. So I'm going to deposit this other 50 crores in a bank as an emergency fund so that I can use it whenever I need it. So SVB mainly runs on these kinds of deposits made by the startups. So they don't have any crisis about deposits because they are receiving lots and lots of deposits from these startups. Let me give an example on how really a bank works. For example, I'm depositing 10 lakhs in HDFC Bank today, and they're offering me 3 to 4% interest on my deposit. They're going to use this 10 lakhs to give loans to others at an interest rate of 8 to 9% maybe. So the spread between this 5 to 6% is the profit for our bank. Just like that, SVB is also using these deposits to generate new loans, to generate new profits on the interest. But what happened is, in the current situation, as inflation hit the markets, the interest rates have gone up, and the startups, as they are startups, they are not willing to take loans at these high interest rates. Instead, they are thinking to use the emergency fund which they have deposited in the bank, which led to increase in number of withdrawal requests. And as I said before, due to the high interest rates, nobody is willing to take loans. One of the income stream for the banks has reduced, and at the same time withdrawals has also increased. So the liquidity of the bank is low, and this created a problem for the bank. Even if you recollect what happened recently with companies like Byju's and Mamaearth, not only with them, many other unicorn startups, they had to reset their IPO plans for now. Just like that, many US companies, mainly startups, also had to postpone their IPO plans. So their only way of funding is to use the deposits they made in this bank. So they had to withdraw all the money they had in this bank. Till now we have talked about 2 causes. One is a lack of new loans, and 2 is more withdrawal requests from the startups or the depositors. And the third problem that caused this situation is bad investments made by Silicon Valley Bank. If you take a look at their balance sheet, you will find this held to mature securities, which were bought at the value of $91 billion. And if you observe closely, you will find this fair value which is of $76 billion. So first of all, let's talk about what is this held to mature securities for a minute. Generally, securities are kind of bonds, like a promise made by 2 parties. For example, fixed deposits are also like a security or a bond, because bank is promising you to pay certain amount of interest, and you are promising it to invest in their bank for like tenure of 3 to 5 years. Just like that, the company has invested in the securities for a tenure of 30 years, 30. which is quite long in securities. So, as they needed money right now because of more withdrawal requests and low equity, they had to sell these securities at this point. Yes, the securities also have an advantage to sell at that certain point in the secondary market at that existing price. This existing price is also known as fair price that you find in this balance sheet. So, after the company has sold this security for $76 billion, they have a notional loss of $15 billion. Actually, this $15 billion is not much of a hurdle for a bank if their equity is really strong. But if you look at the equity in the bank's balance sheet, which is of around $16.3 billion, if you subtract this $15 billion from that, you will be getting only $1.3 billion, which is particularly quite low in case of a bank. So when they released this balance sheet, the investors and people saw this and they started to panic. And another major reason for the panic is the statements made by Gary Tan and other investors. And another investor, one of the investor advised his portfolio companies to withdraw money from this bank as it is on the edge of the wall. All these reasons led to massive panic among the depositors and the people. As I said before, due to low equity and low liquidity, the bank couldn't satisfy all the withdrawal requests of the depositors. So they had to sell the securities. Even after selling the securities, they had a notional loss of $15 billion. You may think, why does this company invest in these security bonds? These held to mature security are backed by government, and these are one of the safest investments ever made by banks. Not only banks, by anyone. And most of the banks prefer to invest in this type of securities. I'll tell you why. In the past, before this pandemic, when the interest rates were low and normal, all the banks had lots of cash with them. So they invested in these securities for a particular tenure. But what Silicon Valley Bank did was, it invested for 30 years, which is really long. And after the pandemic, the interest rates have risen. So always the cost of the securities are inversely proportional to the interest rates. As the interest rates were high, the value of the securities decreased. So they had to face a notional loss of $15 billion. You may get a doubt here. Just like that, other banks also have invested in the security, which I told you right now. So how about those banks? Are they enough with the cash, or they will also face similar situation? So let's take example of JP Morgan. You can see the graph on the screen now. Even JP Morgan has invested some amount of money on these securities, and due to high interest rate, they're facing a notional loss of $670 billion right now. But if you hold the securities till the tenure, the loss will be gone, and you'll definitely get profits. And I think these banks like JP Morgan, Morgan Stanley, I think they are not short on cash and liquidity, so they are not going to face any problem like this for now. How does it impact US markets? Of course, many bank stocks are also going to go down because of this issue, and there will be some instability in the market for the next few weeks or maybe months, because people are really not interested to know about the fundamentals of this issue. They are just like emotional trading and everything. And similarly, Indian markets are also going to be affected, because US markets always has a ripple effect on Indian markets. Just like US markets, Indian markets are also going to be unstable for a few weeks, maybe months. And coming to the third question, how is the bank planning to come out of this situation? The regulators are working with this bank currently to pull out of the situation and return back the money to the depositors. And recently, HSBC, which is a UK originated bank, has bought some of the stake of this bank to help them regarding the issue, and they are also auctioning some of their assets. I think you found answers for all the 3 questions which I mentioned earlier in this video. If you find this video helpful, please like, share and subscribe. This is Prakash signing off.